Welcome to Beyond the Check, the first industry podcast related to Web3 fund investments brought to by Block Sapiens, a leader in fund of funds and venture capital investments. We bring you exclusive interviews with industry experts in private equity, investment banking, business sales, and startup founders' insights. It's our mission to provide clarity to the industry and lift the boundaries of tech investments. In this episode, our host Gauthier Pons de Vincent, managing partner at Block Sapiens, we will discuss the wave of institutions entering the cryptosphere. We welcome our guest, Geoff McAllister, managing director at Hex Trust, one of the first regulated crypto asset manager.
Hello, Geoff. How are you?
I'm very well, thanks, Gauthier.
Thank you for coming. Thank you so much. For a National Independence Day, it's great to have you and obviously tackle the institutions in Web3. You're Geoff. It's Geoffrey, right? Geoffrey McAllister.
Jeff is good, yeah.
Jeff, okay. Australian, right? You told me.
Correct.
Australian.
Correct.
How is it actually to be in Australian in Dubai?
It's good. I mean, for a start, I'm good with the heat.
It's good with the heat. I mean, I'm very amazed always to see people coming from countries with a lot of green and very. Obviously there's nature in the UAE, but even for me as a French, it's very difficult to adapt. Sometimes missing the countryside and.
It is a little bit different, but I think they've built something pretty impressive here, and.
Sure.
Of course, it's nice to go back home.
Definitely. But, Do you go very often, or?
Sort of yearly, normally
Okay.
yearly, but also a lot to Europe.
Okay.
More to Europe.
Yeah, we're discussing the time. Obviously 14 hours to get back home. It's a bit difficult. So I think it's. But you lived in Australia, right? I mean, you've been. I've seen that actually you had some kind of experience already in the UAE before. Long time experience. Also, one of the things I wanted to tackle, is obviously your background in the industry, but obviously not only crypto, also institutional and traditional finance. We tend to, one of the issues in crypto is that we tend to talk a lot about education, around crypto for institutions, but not the other way around. That's something that I think we're missing sometimes. So. A lot of people are working in an industry that is very finance oriented, but they sometimes don't have any background in it. So yeah, we'd love to understand a bit, your background and how did you get into crypto? What made you made a jump?
Sure, completely. There's a couple of points there, I guess. Yes, I lived in the UAE before. I have 25 years plus TradFi. Background, mostly in capital markets risk.
Okay.
And I lived in Abu Dhabi, working at National Bank of Abu Dhabi, FAB. I had 4 years there, and then I was transferred to Hong Kong.
Okay.
Some prior experience here, but and then you were talking about the knowledge transfer in the industry, as in it's not just TradFi learning about crypto, but actually there's maybe some gaps in the crypto industry where there's maybe some lacking of TradFi financial experience.
Yeah.
And completely agree. Actually, I'm, of course, Hex Trust is my main focus, but I also was involved with a few other people in setting up an industry association called the Crypto Risk Office.
Okay.
And actually it had exactly that goal in mind, to help sort of not just bridge in people from TradFi to crypto, but also to, introduce the TradFi sort of risk management best practice and principles to the crypto market as well, because obviously last year was... a bit of a
moment to do it. But is it easy to get the people from, because obviously in crypto a lot of people have tech backgrounds. They don't necessarily care so much about finance, and obviously it's a big subject. And like you just mentioned last year, not only last year, it's an industry that needs this kind of of knowledge. But how easy is it to use, like to bring actually like tech people to this subject? Are they open to learn, or are they like, no, I'm a DJ and I don't want to talk about like risk management or
Yeah, I think it's a journey, and we're still probably quite early. The industry as a whole is, I would say, underinvested in risk management. You just look around the industry at all the big names and how many of them have a dedicated group chief risk officer.
Yeah, that's true.
It's a bit light, but they're coming. Yeah. It'll get there.
I think it's we see a lot of auditors. Obviously, like we see smart contract auditors. Again, tech oriented, but on the finance side, not so much. I had also this association, this CFO. I don't know if you've heard of them. It's a CFO association in Web3. It was led by actually this startup called Request Finance. So they do basically their management platform for your payment payroll. So it's all compliance and so they built also an association called the CFO Association, where you have all the CFOs from traditional background that come into and analyze like how to deal with with the crypto finances within companies. I think it was pretty interesting, to see.
Yeah, sounds like a good initiative. Yeah,
we hope that we won't have to say crypto industry anymore, and just like like any industries, and crypto is just like maybe a mean or structure, an infrastructure. And yeah, I think it's what we're trying to do, at even at Block Sapiens, like bridge more the gap between institutions. And,
it's just a matter of time. Obviously, the whole value layer of the economy will eventually transition online or on chain. Yeah. And
I come back on my question, but the what made you, because it's pretty difficult to jump from like banking, and I saw that you had some experience at Goldman, if I'm not wrong. It's very tough to jump from this to crypto. What made you, because it's a big leapfrog, what made you like do the jump? Just like natural interest, or you saw like a career path as well, interesting career path?
So, both. And yes, it is kind of difficult in some ways. Also because the crypto industry, I think having this kind of tech background and focus, it's quite interested in this sort of being a disruptor and disruptive model. And, I have friends who have told me that other large sort of institutions in crypto, large native companies, exchanges, so on, they actually prefer to hire people from Uber rather than Goldman Sachs.
Yeah, no, that's right. For sure. I mean, it's more relevant.
I kind of, I get it. You need people who are not sort of constrained by perhaps traditional thinking, but, the TradFi sort of sector has managed the value layer of the economy for hundreds of years. Yes. And they've got, huge experience in managing the risks that are involved. And you can't ignore that. Yeah, in fact, you need it, as last year showed.
Exactly, and also it's without TradFi, there wouldn't be crypto as well. Like people need to understand what are sometimes the problematics coming from TradFi, and how can you solve a problem if you don't know it by the inside. So I think that completely makes sense. And I guess it's one of the reasons Extras got created. If you know, a bit about the background of Extras, and if you could tell me why Extras got created. And I don't think it's a very old asset manager, but just like.
Well, I think it's all relative. In crypto terms, I guess we're fairly seasoned. We were founded in 2018. Yeah. So sort of more than 5 years ago now. Look, our founders were from a TradFi background, and they were into crypto early, which is great, and they had the sort of foresight that they could see that this institutional grade custodial requirement or solutions will be required for the market as institutions come in. So we were launched as a dedicated institutional grade custodian in 2018, bringing bank grade architecture and workflows to our clients. So
built out of Europe at first, or
Hong Kong.
Hong Kong. Okay.
Hong Kong,
okay.
yeah. So there's a sort of expats in Hong Kong,
Okay.
if you like, I guess. But
Oh yeah, that's why actually when I met the team, a lot of people were still actually in Hong Kong, and I was wondering like why there's so many people from Hex Trust in Hong Kong. So okay, now it makes complete sense, and I guess like Dubai also makes sense because it's a very similar markets. A lot of people that are in Dubai had like a background in Hong Kong and see the same things happening. I've heard that a lot. I went to Hong Kong, but I'm not like I haven't had the experience.
I mean, Hong Kong's amazing. It's like extremely commercial, and the geography of the city, if you like, being so compact and so close together, it enables business to just really flow very easily. You can have 6 or 8 business meetings in one day. Just walking around, 5 minutes.
It's very compacted.
10 minutes here to there.
Yeah. And also the regulation side. We had actually an episode on Hong Kong actually. That's why I'm talking about that with Newman Capital, one of the fund out there, and discuss the regulations. It's definitely obviously it's something that we're not seeing right now in the US, but obviously it's coming, like you're saying, and obviously, like we have the whole topic of ETFs that is, I think, important to tackle, and also understand like how significant, let's say, an ETF from BlackRock or Fidelity would be for the. And I'm sure it's a topic that you guys are looking from closely because the clients are similar kind of clients.
I mean, I think it will be very significant. I mean, I'm not going to hold my breath to when it actually arrives in America.
No, for sure.
But I guess it's just a matter of time. And when it comes, it will be very significant because the whole space is still, still a bit confusing for people who have not looked into it.
Yeah.
And the ETF will just enable people who have an interest or see that it is important for the future of the value layer of the economy. I don't want to just say finance, but then it allows a whole range of investors to allocate something from their portfolio, easily in a TradFi approach. But it'll bring funds in, and I think we're probably maybe not immediately, but at some point we're going to see a tsunami of institutional FOMO.
You think like maybe it's a lever, I would say, like having obviously BlackRock, the biggest asset managers in the US, starting with ETF. And you mentioned also at the beginning we're lacking liquidity. I mean, you mentioned that it was still like under capitalized as an industry. It's not such a huge industry actually. It's over $1 trillion. I mean, compared to traditional industries, it's not so much. So I guess that would be a big thing. But in terms of, I think from what I'm trying to understand is like more institutions. How do you see the industry with more institutions? Because right now, like we know how the crypto industry. How long have you been in crypto? Like maybe 1-2 years?
2 years.
Okay, so you start like seeing like how this industry works. How do you think would the industry change with institutions? Obviously on the regulatory side, on the ecosystem side, like how do you think it will affect the industry?
So obviously the regulatory side is hugely important to clarify that landscape, to allow the traditional institutions to come in, to give them the green light. In terms of how it will change, I mean, I think the leaders in the TradFi world are in or coming in. They're getting, they're either in, they have toes in the water, or they're getting ready to jump in. And it will change a lot. I mean, I think they're fully aware of where this is going and the potential, and they're also a bit concerned that all these upstarts in the digital asset world, natives, are going to start eating their lunch, especially on the finance side of things. So they'll come in, and they'll come in sometimes with their own solutions, and but be providing products and services that will ultimately increase the adoption.
Yeah, because it's also important to see your positioning as a I would say institutional crypto asset management firm. I would say, I mean, like it's the position of HexTrust has always been on the institutional side, right? I would say is a value prop.
I just to clarify, institutional custodian firm. There is another part to the business, which is the OTC side. But the core, the backbone, I guess, has been
the custody.
Has been institutional custody. Yeah.
And do you come to let's say, do you exchange with those let's say big asset managers? Do you have like discussion with them around crypto, or is it like completely like two different thing? You guys are not.
We do talk to some of them, and they are coming. Mm-hmm. Yeah, so we can see that they're coming. We know they're coming, and we see some coming as clients, but we still have a large number of native clients, dominantly, which has served us well. Sort of layer 1, layer 2 blockchain foundations, their treasuries, and then their associated ecosystem projects, and so on.
So you think it will be? Do you think how is the, let's say, the segmentation of clients? Is it like more like, let's say, 20% of institutions and 80% of native crypto companies, or like a bit more institutions? I'm very curious because if you have that many like crypto companies, it means that you're successful in like showing the crypto world that institutional custody is important.
I guess it depends how you measure it, and I wouldn't be able to give an exact number, but
there's a number of companies, or like the total value locked from.
Certainly, I'd say we're more. We're still bigger with native clients, and I would say last year, while it was a train crash for the market, and probably some lessons that were important for a lot of the market. I guess from a custody point of view, it was, at least good that people started to realise that sort of proper custodial solutions are important.
No, I mean, I think that, I mean, they recognize that, obviously, with the news and everything happening, but more on the institutional side, I think it's important to tackle also what from your side, what do you think are the big, hurdles, like how to onboard more institutions into, like for example, HexTrust? What do you think are the main hurdles for those institutions first?
Yeah.
And what do you think is the best way to onboard them?
So regulatory so that landscape needs to be clarified, across the whole world, right? So. Dubai, UAE is probably leading the way, and in terms of clarifying the regulatory position for the different activities in digital asset markets. So that's critical to give the TradFi guys the green light to come in and to know that they're also able to deal with regulated institutions on the crypto side. So that's that, and then of course banking facilities, banking rails, as well, can still be a challenge for people wanting to work in this space.
Okay, so you mean like the relationship between traditional banks and crypto companies?
Just a lot of crypto companies struggle getting normal banking services. Yeah.
No, that's completely true, and we see more and more banks actually getting crypto licenses. I don't know if you've heard. Do you know? I mean, the Société Générale in France, in Europe. I heard that last time that they got a crypto license, and they're thinking of a ETF in Europe as well. So it's only in the US. We always talk about the US, but even in Europe, a lot of things are happening. I know also the traditional funds in Europe can now start investing in tokens, something that they couldn't do before. It was only equity mandates. I think things are changing for sure. And it's very political at the end of the day. It's it's not a subject that we like because we don't have so much power into it. But I guess like just discussing with those institutions, and you having a traditional background, you can also, I'm sure you still have people that work in TradeFi, so it's easy for you to talk with them.
It's still very much for a lot of them. It's still very much an unknown space, and I think there will be the leaders in TradFi that come in and take the jump, and then the followers will come, and that's when I think you see this sort of institutional tsunami of institutional FOMO.
Yeah,
when the followers see the leaders jumping in and gaining market share.
Yeah, that could lead. I mean, that's what we're expecting. I mean, even to lead the next bull cycle, I think it could be pretty considerable. I mean, watch it from very closely. There was one thing I wanted to tackle with you on centralized exchanges. Obviously, the custody in crypto is largely held by centralized exchanges, and obviously we've seen what happened the last years with a complete fiasco with FTX, but also right now what's happening with Binance. So we see obviously CZ stepping down, the CEO. Maybe it's like a signal for change with those exchanges. But I'm very curious to understand your take on centralized exchanges, since they are big. They have a big stake of custody, and if you think that we could assist to sort of like a institutionalization of centralized exchanges, so see them like change their profile,
almost like a bank.
Almost like a bank, yeah. Because it's, I mean, I'm sorry, but it's in crypto. It's how they look,
Yeah.
My friend asked me, what do I buy? Which exchange do I use? So yeah, I'm very curious to understand.
Yeah. Obviously, their model has been a little bit problematic just because it's this sort of centralized omnibus sort of balance sheet solution to managing the funds that investors or clients put in, and it's unlike a custodian where it's legally segregated and technically segregated. In proper like a custodian model, the funds remain on the client's balance sheet, not on the custodians, and then also the assets are completely segregated, at least in our model, and clients can see all of their assets independently of our platform. They can see them on chain, on the node, or via any blockchain explorer. Every second of every day, you can see your assets where they are. So whereas the omnibus balance sheet model is obviously completely different, and you have a different counterparty exposure profile and everything. But to be honest, not so different from a bank. But the banks are highly regulated and have literally centuries of experience in learning how to manage their risks. In some ways, the banks are managing more risks. They have huge liquidity profile mismatches. They have huge amounts of credit risk, market risk, operational risks. Those are all apparent as well in the exchanges, but maybe to lesser degrees in some cases. But the degree of sort of risk management and regulation around managing a bank's balance sheet is obviously quite significant.
Yeah, and that's why I'm wondering like what would be the next. Obviously, there are the current exchanges like Binance, but also I don't know if you were in Abu Dhabi last week, but there was a lot of there was this M2 exchange backed by the government, if I'm not wrong. Yeah, I mean it's what they say, but we're very curious, to understand like if those exchanges might become institutions, in the future. So get licenses and also get the risk, that goes with it,
Yeah, I mean they're getting their licenses and there's the regulations are developing and they're getting sort of capital requirements and other requirements around proof of reserves and so on. So I think it's, you know, getting to a better place all the time. So hopefully, you know, what we saw in the past, obviously FTX was, you know, something else, some kind of complete fraud. I don't know.
Do you see them? Do you see crypto exchanges as a competitor?
Look, actually, I see them probably as, I mean, essential for now, but
for retail at least.
but they're probably sort of an intermediary step to where the market can go. So obviously, custodial solutions are hugely important, and ideally, you just keep your assets in either self-custody, or if you're an institutional and you're working with other people's money, then you use a regulated custodian. But the trading on exchanges and everything, and all the counterparty risk that you take in executing trades will get mitigated as, you know, technologies and solutions improve.
No, the reason I'm asking you these questions, because I remember having this discussion with one of the family office in here in Dubai, and they were asking me. So obviously they're trading a very large amount money, and asking me, should we go through exchanges? And then they saw what's happened with those exchanges, and yeah, they were not really like they wanted to find obviously OTC opportunities. So I guess, you know, maybe for the institutional side and companies, it doesn't make much sense to go with a centralized exchange, you know, and go more with something like Hex Trust.
Yeah, I mean, for storing assets, for sure, but obviously for trading, you need to go where the liquidity is.
Yeah, for sure.
But I think more and more that can move to sort of decentralized solutions as well.
No, that's for sure. Maybe we see a lot of like new things happening, coming from the DeFi side as well, which is pretty interesting. But yeah, I mean, like on Hex Trust, since we didn't tackle so much Hex Trust, I think it'd be interesting to understand what kind of what specific services you guys provide, and just to facilitate, you know, this institutional side. Obviously, you mentioned OTC, custody. So the custody, and I think, you know, custody is obviously a key use case of crypto. The fact that you do have more custodial choices than you do in TradFi, because, you know, I mean, you can leave your money under the mattress, but maybe it's not as good as, you know, having your money on a ledger device. But yeah, so custody, you know, will play sort of a backbone role for the value layer as it comes on chain. So we're there. We also have an OTC desk operating offshore, which is separate entity, which provides clients access to trading services. There's a number of other sort of initiatives and projects which I probably can't go into detail on the progress
today, but I guess sort of watch out next year. It will be
perfect. Yeah, I think
quite interesting.
No, definitely, and the typology of clients. Obviously, we spoke about companies, crypto. Do you have like also let's say personal finances, like you know, let's say high net worth individuals, people that want to...
Clients is B2B, institutional, corporate, like I said, layer 1, layer 2 foundations and their treasuries and so on, and DAOs as well, you know, a lot of native entities, but yes, also family offices and high net worth individuals.
Okay,
but not retail.
Not retail, yeah, for sure. And so and in the UAE, so you guys are, because I know you're very active in the UAE, and it's not a long time since you guys are super active here. You got also the VARA license as well. My knowledge, VARA, which is a virtual assets regulatory authority, just for the audience, but. And we know that it's a tough process. A lot of people are saying, yeah, we are VARA regulated. But then you see that they actually, because there's several steps, and they just are like, you know, within the steps, but they are not actually regulated. So yeah, you came here, you got this license, and I'm very curious also to understand like how actually, because a lot of people are asking how difficult is the process. If you have any hint about it, I know it's not your expertise, but I'm sure you know like how it works, the steps.
Yeah, there is kind of, I guess, a fair bit of noise about how it can be a bit of a process. However, I do have a slightly different take on it. I mean, we were part of the first cohort of, I think, 18 firms that initially applied for the initial MVP last year. Okay. And we were actually fortunate to be the first one to obtain an operational license for the custodian in February, I think it was. And then recently we had the full license confirmed, which is great. I think we were 18 then, and we were working with the regulator, and we had the opportunity to have sort of group meetings with them where we could share our feedback on the rule books they were creating. Okay. And we certainly made some feedback on the custodian rule book to have it to suggest that it should be something like really relevant, in that it really differentiated between what is like a good custodial solution, legally and technically segregated, versus an omnibus custody solution that you see with other players in the market. So, which is there in the rule book now, which is great. So
you set the standard, I would say, for at least for the UAE.
Yeah, I think the regulator took the time to look around and look at the different operating models, and the custodial rule book here is pretty good. Yeah.
And the companies, the other, so you said 18 companies. Were they in similar type of companies or completely different? You guys?
There were.
I'm sure they took like different segments of the industry, so they can.
A couple of custodians, exchanges, services, fund management, and so on. Yeah, a variety. And now now they have hundreds, if not 1,000 plus sort of applications. So this, it's a huge challenge for them. They've got, when was the last time a banking regulator onboarded more than, 2 or 3 new banks in a year?
No, yeah, that's for sure.
And now they're sort of having to look at all of these institutions coming in and getting licenses that are not, in some cases they're kind of close to what a bank does. Not all of them, but so they have a huge workload. So I'm sympathetic there, but at the same time, it's a huge opportunity for the UAE because they've moved fast, and they're onboarding huge amounts of the Web3 space in the world coming here.
No, yeah, we definitely see it. A lot of people are asking me also all the time, like, what's really happening. There's mixed, I would say, opinions. Some people are because it's it takes time, and people came at a certain time. I think it's changing like every year. I mean, I'm here only since like 2 years and a half, so very new in the UAE, but we see things changing very drastically quickly. And so yeah, I mean, we're happy for that. But I think also if you look at Europe as well, I think a lot of things are moving. Just to understand your position, how are you guys regulated in Europe? How do you work there on this?
We're registered in France and also registered in Italy, and we have an office in Milan.
Okay, and in the specific regulatory framework, obviously there's MiCA regulation. I'm sure you guys are.
I think that's the next step. But the first step was the local registrations in France and Italy.
Oh, it's funny that you guys are. I'm funny. It's I didn't know that you guys were actually regulated in France.
Yeah, but just to jump back to your point about getting the VARA license here, I think. To your earlier point that there's perhaps not so much TradFi experience in the crypto Web3 space, then all of the people that don't have that prior experience and they're coming through and getting registered and regulated, they're kind of maybe they haven't had that experience in TradFi, but obviously regulation in TradFi is really significant, and does take a lot of time and effort and resources from the traditional players. And I think this is a bit of a learning curve from the Web3 community as well, and it's because you're not just building websites that exchange information. It's all about value layer.
Yeah. And it's also like a first, it can also set like obviously the standard, like you mentioned, and be a first layer of entry for those companies, and maybe we will see a bit less like money laundering and, like basically criminal stuff happening in crypto, thanks to that. So I completely agree with you, like regulations, so important. We've been talking about it for years, and now it's actually happening, so that's great. And actually happening because, there's people talking, and then there's actually getting the regulation and operating like that. I know in Hong Kong as well now they're very so when we had the discussion on Hong Kong, they are very active as well, getting licenses for crypto exchanges as well. I'm sure you guys have a license there as well.
They're coming, and they're I guess probably moving absolutely in the right direction now, whereas some other regions are still not sort of moving. But I think they still have some catching up to do compared to the UAE regimes.
No, that's a good. I think that's great. Great news that you say. I mean, you having the experience in Hong Kong and you're saying that now. I think it's it's good for us, and that's why we're staying here. But yeah, I mean, more particularly on your side. I mean, we'd love to understand also. I mean, get your point on what do you see? Like the next intersection of traditional finance and crypto heading in the next years. How do you see, like, let's say the industry 5 years from now, with companies like Hextrust and also like obviously like BlackRock and traditional players? How do you see the overall industry?
Well, yeah,
yourself,
I think
not the vision of the company.
understood. Yeah, it's. I think, like I said, the leaders in the TradFi world that are coming in, I think they understand where this is going, and that every TradFi sort of product and service and marketplace is kind of up for grabs. So everything in the value layer of the economy will come on chain in one form or another at some point. Even the deeds to your house, the title to your house, will, might be an NFT or I don't know, dynamic NFT or nested NFT or something like this. Your watch, your car, all of your, everything that you see on Craigslist trading secondhand will eventually be sort of buying and selling some sort of a NFT or something. So
do you hold crypto yourself? Are you like actually? I know it's not a like a question. I think it's a lot of people work in crypto and don't necessarily hold crypto. That's a big thing, and actually companies that are trying to bridge this gap, so help people in crypto to get their better like allocation in the industry. Are you like comfortable with like trading crypto or?
So I've had some small experience on the personal side in it.
Okay.
Done a little bit across different networks, but not a huge amount. Not as much as I would have liked.
I mean, you have the risk, you have the risk mindset, so I'm sure you don't want to go full into this in this like CZ selling your house and investing everything in Bitcoin. I don't think it's if you have experience in risks finance, I'm sure you're not very comfortable with that, I would say.
Yeah, I mean, of course you don't want to put all your eggs in one basket.
Yeah. And but I guess it's very difficult now to look at other things, and because if you look even the stock markets, even real estate, a lot of things are going down. So it's difficult. A lot of people are losing faith in other asset class. I was discussing last 2 weeks ago with one partner of a fund that shared one of these stats on investments from retail in France, and they're actually more crypto holders, more liquidity held in crypto than in stocks.
From retail,
and people were surprised, but it's a big statement. It's stats, it's from the authority of financial authority in France, so it's like proved, So yeah, we see that, and it's very interesting, I think, from a retail perspective, I would say.
Yeah, I mean, well, in terms of losing, obviously the markets are, entirely influenced by liquidity, and in our current monetary system, that liquidity can be sort of, and is often very quickly and easily created overnight by the relevant authorities controlling the different currencies. And that's, I think a lot of people have obviously started to see the sort of the inflation bogey, and start to become more and more aware of the credit creation and fractional reserve nature money spinning machine that generates all of the inflation in the economy, which unfortunately hurts the poorest people the most. And more people, I think, are starting to appreciate that. In terms of your comment on the retail market in France, I guess also it's just kind of a bit easier to just jump in and go online and trade crypto than it is.
No, that's true.
But ultimately the stock market will be all traded on chain as well. Right?
Yeah, that's one big subject, tokenization. We talk about real world assets, but also even stocks. I think that I'm a firm believer that will play a big role, because there's different use cases, even for funds, for example. There's this thing I'm always talking about, is like, right now, if you want to invest into a fund, like traditional funds, if you don't have a minimum investment and you're not like an institutional, you don't have like an investment bank, it's pretty difficult, right? Yeah. Investing into a DAO, pretty easy, right? Because it's you have a token, so you just go on an exchange, and that's, I think that's we're gonna see more and more like tokenized funds, and obviously the stocks of companies. So yeah, I'm a firm believer of that, to be honest.
Yep, completely. It's all coming on. It's just a matter of when.
and a matter of when, and how regulations are being set. But yeah, I think we take a lot of different subjects, but I think we're running out of time right now. So we'll wrap up this. I mean, thank you so much for coming again and discussing that. We learned a lot about from you guys as well. So. And hope to see more of you guys on the podcast or later episode.
Happy to join. Thanks for having me.
Thank you.
Cheers.
Thank you. Bye.
Beyond the Check is brought to you by Block Sapiens, a leader in fund and venture capital investment. If you've enjoyed this show, don't forget to subscribe and leave a review. Learn more at blocksapiens.io. While we take reasonable care to select recognized experts for our podcast, please know that each podcast represents the independent opinion of such experts only, and not Block Sapiens. We make no warranty, guarantee, or representation as to the accuracy or sufficiency of the information provided. Any reliance on the podcast information is at your own risk. The podcast is for general information only and cannot be considered legal or professional advice.